In case you guys missed the community post, Johnson & Johnson declares its dividend raise. So Johnson & Johnson declares $1.13 per share quarterly, which is a 6.6% increase from the prior dividend of $1.06 they were paying. Ex-dividend date is May 23rd, and then they will be paying out June 7th. So congrats to all the J&J shareholders. And the last dividend raise comes from Southern Companies. So Southern Companies declares 68 cents per share quarterly, which is a 3% increase from the prior dividend of 66 cents they were paying. Ex-dividend date is May 13th, and they will be paying out June 6th. So congrats to all the Southern Company shareholders as well. We have two more companies that are expected to raise their dividend this coming week, and we will be definitely enjoying those because that will grow the dividend snowball much larger. Gotta love passive income, guys. What's up, everybody? It's Investing Sensei here to bring you episode 131 of the portfolio update. So hopefully you guys are doing awesome. I definitely am. You guys already know it's Sunday, so it is time to go over how the portfolio performed this past week. So in this video, I have quite a bit of things that I do want to go over, so it'll be very great. First thing we're going to do is we're going to actually go over the portfolio, how it performed, how it's doing overall. How the market's doing, and then we're gonna jump into the activities. I'll show you what I bought, what I sold, any dividends that came in, and then we're gonna jump into 3 companies that I will be buying in the month of May. I'll continue to dollar cost average, and I'll continue to build out those positions, and then we'll jump over to the Google Sheets. As you guys already know, that every single Sunday we come back, we kick off these scripts that I have completely available for free. All I ask in return is that you're subscribed with that bell notification. You drop a big thumbs up on my videos to help out the channel. But I have these scripts that will go out and calculate your projections for the amount of dividends you are expected to get. So you guys already know we're trying to actually get for the yearly. We're trying to increase that every single Sunday, no matter what the portfolio is doing. If the portfolio is going down, up, sideways, whatever, we just care about every single Sunday. Continue to increase this, which by the end of the video, you should see this much higher. And honestly, the portfolio went down this week, so it'll be exciting. That's very motivating to see this continue to go up. But overall, we're trying to get this to $300 per month for the end of the year. If we look at the money invested, which is where I have my goals, you'll see that we do have 2022 goals to keep us focused. One of the ones is to try to get to make $300 per month on average each quarter. So we're trying to achieve that. And then this one right here, guys, which is reach 6K subscribers. We are so close. So if you're new to the channel, be sure that you're subscribed with that bell notification so that you help out the channel and help us achieve that goal where we're so close. Yeah, we're trying to achieve all these goals here by the end of 2022. It'll be very exciting to see that. But overall, guys, you already know that we're working on these quarterly dividends, seeing this staircase continue to go up and up. We're going to be working on Q2 of 2022, which we're going to get majority of our dividends actually next week. So if I look at the dividend payout, there's another script that I have available for free. You'll see that we're going to be getting Altria, American Towers, and JP Morgan, and that will wrap up the month of April. So it'll be very exciting, especially because this is where we get most of the dividends. And then we'll start the month of May, and then I'm really looking forward to June because that is going to be one of the best months that we will get. Typically my 3rd month of the dividend income is my best month. Let me know in the comment section what your best month of the quarter is, or where you get the most dividends from. So it'll be very exciting. I'll see you in the comment section there. But you'll see our annual payout. It's very awesome because if we look, we started investing in 2019, and then on 2022 we made $781.60 in the first 3 months of the year so far, and we've already surpassed the whole year for 2019. The whole year for 2019 we made $779.62. So that is what I like to see, and this is completely passive. We do get tax benefits, which a lot of these dividends become qualified dividends, which is pretty awesome. But yeah, guys, let's go ahead and actually jump into the video to actually start this off. Alright guys, so the portfolio currently is at $190,559.07. Remember that this is going to be moving up and down and just fluctuating, and we don't really care about that much. Main thing we care about is that dividend snowball continue to grow and grow every single Sunday. As you'll see, we have nothing in our buying powers, but if we look at the value over time, if I look at the 1 week, you'll see that we're actually down 3%. So that's about $5,883. So we were up almost to the 200K, and then we started moving downwards, especially with big tech reporting next week, which is going to be a very volatile week. I'm really looking forward to it because it might create some great buying opportunities, and I will continue to dollar cost average, continue to accumulate more shares. It's just a great opportunity to buy these. In the long term, these companies will flourish, and we will continue to make more and more income over time. But if we look at the 1 month, guys, here you'll see that we are down about 7.98%. That's about $16,000, almost $17,000, and we just been on a downtrend. But you know, this is the dividends is what keeps us motivated to continue investing, because we see those dividends continue to come into the portfolio, and it's allows you to buy these shares even cheaper and allows you to accumulate more shares. So I definitely prefer the red markets versus the green markets. If we look at the 1 quarter, you'll see that we're down about 3.47%, which is about $6,000, almost $7,000. And you see it's been very volatile. At one point we hit about 187,000. I believe one point we actually hit 185,000, but it just didn't register it on here on the value over time. And if we look at the 1 year, we're still up. We're about 8.89% up, which is about $15,000. But you see it's been a very volatile ride up and down, but the trend over the long term is going to go upwards, especially with those dividends continue to go and grow and grow. If we look at the overall time, you'll see that this is the market, the 2020 market crash of March, and we just continue to buy and continue to dollar cost average, and in the long term it's been paying off so far. This is just a great time to start accumulating more shares of our great positions that we love, and I will be showing you 3 companies I do plan to buy in the month of May, and hopefully, you know, it pays off in the long term. But let's go ahead and jump over here to the activities, guys, so I can show you all the stuff that I did this week. So if we look at the range, and then we start from the 18th of April, you'll see that on the 18th we actually got a dividend from Leggett & Platt, which was $12.50. Absolutely had to do nothing to get this dividend, just continue to hold some great long-term companies. And on the 18th we got Realty Income, which is $16.04. So passive income there, guys. On the 19th we did 2 buys, which was, I believe, just reinvesting the dividends back into themselves so that next quarter we get even more dividends. And then, guys, on the 20th, someone was pretty awesome. They looked at my referral links, which are in the video description if you want to check them out. They signed up and they got $10. I also got $10. It was like they bought me a Starbucks coffee, but instead of buying a Starbucks coffee, I went ahead and reinvested those $10, and I bought some actual Starbucks company shares. So 0.12 shares. So thank you so much for whoever signed up, guys. I will hold these shares for the long term for me. On the 21st, I deposited $100, and then I did 2 buys, which was Home Depot, guys, and Starbucks. Those are the companies I've been going to. I've actually moved away from Target, especially because if we look, which I'll show you in a little bit actually. First, let's find out how much we made in dividends and passive income this week for doing absolutely nothing, guys, especially with the portfolio going down. I do have this green button. It's called Calculate Dividends. All it does is adds up all the dividends that we made for this week or on this page, and it shows it in a pop-up. And again, I have this script available for free. All I ask in return is that you subscribe with that notification if you have not done so already, and drop a big thumbs up on my videos to help out the channel. But let's go ahead and click on it, Calculate Dividends. So overall we made $28.54 in passive income for this week. That was pretty sweet. Next week we are looking forward to more dividends, even more. But real quick, I'm gonna show you. So you guys already know that the past couple months I started buying Target, which was trading right around $200. It's actually trading at $241.68. So I'm gonna actually stop buying that for a little bit. If it comes back down, I will buy it and accumulate some more shares. But right now I'm going to show you the other 3 companies I want to focus on and buy more shares of these companies. So let's go ahead and actually jump over to those. So the first company that's going to be, guys, and you probably already guessed it since you saw the activities, and that is going to be Starbucks, guys. So this is actually trading view. If I show you, it's got some technical that I can show you here. So if we look at Starbucks, currently it's trading about $78.17. And then if you look, you'll see these lines here. These are the simple moving averages. And so we have the 50, 100, 200, and 300. And so if we also have the 21 EMA, which is the white line. And so you'll see that Starbucks has actually broken through all these lines. And so if we look back, way back, a lot of these in the long term, they continue to follow this. So typically if we look at the purple line for the trend, it's usually a great buying opportunity for blue chip companies, great long-term companies that you don't mind holding for the long term. And so you see all these purple lines here. When they do hit, it's a great buying opportunity. Anything in the green line, which is going to be your 200-day, and then the yellow, which is your 100-day moving average, are typically great buying opportunities. And you'll see that we're way below that. So I'm definitely planning to accumulate more shares of Starbucks, and for the long term, we'll see how it plays out. A lot of people are afraid because of the union and everything that's going on with you know, the new CEO, they're returning. I believe that we'll be fine in the long term, and I'm going to continue to buy this fear, and you know, we will check back in a couple years, see how this played out. But let's go ahead and move on to the second pick, guys, and that is actually going to be Home Depot, guys. So Home Depot is also in the consumer section. I forgot to mention this in Starbucks, but Starbucks is in the consumer section. I'm actually trying to accumulate more shares in my consumer sub pie. But if we look, Home Depot is currently trading right around $300.11. And so if we look at the technicals again, you'll see that the purple line is the 300-day moving average. We're way below that. 21 EMA as well, it's way below that. And so if we look at the 200 and 100, we're trading right below that as well. And if we go way back and zoom out, you'll see that the purple and the green line, which are the 300 and 200-day moving averages, are typically really great buying opportunities for the long term for these type of companies. And so I am going to be buying this, and Home Depot is a great pick for me for the long term. And so we will see how this plays out, but that is the second stock that I do plan to buy in the month of April. I am going to continue to dollar cost average, because if it continues to move downwards, I want to continue to, you know, buy the downtrend. But if it starts moving up, I'm going to continue to dollar cost average still. But we will see how that plays out, guys. I think it'll be very, very profitable in the long term, especially because we're in it for the dividend and the dividend growth. But the last pick is actually going to be JP Morgan, guys. So this is in the financial sector of my sub pie. And so right here, if we look, you'll see that JP Morgan currently is trading about $126.70 And so if we look at the 300-day moving average, 200-day moving average, and 100-day moving average, we are actually way below that. We broke through it, and I think it's a great buying opportunity for JP Morgan for the long term. If we look at back, you'll see that these trends here, it's just been a great opportunity to buy, and I think in the long term this will pay off for us, guys. So JP Morgan is my third pick. I hope it goes below $120 a share, because I would buy a lot heavier. But yeah, JP Morgan is going to be a great pick for me. I believe they're going to be having a dividend raise hopefully in the next quarter or so, but we will see how that plays out. But that is the third pick, guys. Let me know what companies you guys are planning to buy in the month of May. Remember that we are dividend growth investors, so I'm going to continue to dollar cost average into these 3 picks and accumulate more shares over time. And so yeah, let's go ahead and actually jump over here to the Google Sheets so that I can actually show you guys how much we made in dividends for this week. Completely passive, and you know, well, I guess not for this week, but how much we increased our projections. So remember, our yield on cost right now is 2.56%, which is actually really good. We try to aim between 2 to 3%. Dividend yield is probably going to actually go up, and that is because the portfolio has gone down. But first thing we're going to do is go to dividend payout. You'll see that we have about 47, I guess row 47. We should see the dividend increases from Southern Companies and Johnson & Johnson show up. So we have this script. Go over here to portfolio tools, get latest dividends. What this will do, it'll wipe everything and recalculate everything for us. I guess not recalculate, but grab the latest you know, dividend, declared dividends from Seeking Alpha. So there we go, guys. So it's running right now. We gotta give it a little bit. And so it's still running, and it looks like it's done, guys. So you will see that obviously we have here the 3 companies, and then we will wrap up the month of April, and then we will start May. So you'll see that we got a raise from Southern Companies, guys, which I showed you at the beginning of the video, and then we got Johnson & Johnson's dividend raise. So this is a pretty cool script I have completely available for free. Again, all I ask in return is that you subscribe with that notification if you have not done so already, and you drop a big thumbs up on the videos. But if you do have some pretty great ideas, let me know in the comment section. We can improve these scripts, make them even better for the community. But yeah, this is what we expect to get. If we look at here the settings, guys, and we actually delete this for us, we can jump over to personal capital, and that way we can actually grab the latest copy of our portfolio holdings, which includes all our buys from this week. So let's go ahead and jump over to there. Alright, guys, so we're at personal capital. Under the M1 account, you'll see this green button. Click on it. This will actually copy the latest copy, I guess, your holdings portfolio into the clipboard, and then you can jump back over to the Google Sheets, right click, paste special, values only, and that now we have the latest copy of our portfolio from this week. If we go to holdings, this is actually everything parsed out from last week. So if you go to portfolio tools, update portfolio holdings, when we click on this, this will wipe this page and recalculate everything with what we just pasted. So update portfolio holdings, you'll see it get wiped, and then we can jump over here to the dashboard, and you'll see everything's being calculated for us. And look like it's done, guys. So dividend yield went up, which I was expecting because the portfolio went down in price. So 1.66%. Dividend yield, or I guess yield on cost, stayed about the same. And then the yearly went up. So we went up. Actually, we went down, guys, which is kind of no, sorry, I looked at this the wrong way. I was looking at this one. We went up by $9, almost $10. So that was pretty sweet. For the month, we went up to $263.33. Remember that our goal is to try to get this to $300 by the end of the year. I think we will get there, so it'll be very exciting when we get there. On the week, we're making about $60, almost $61 a week in dividends, and the day we're making about $8.66. So we went up about 3 pennies now every single day. Hourly, we're still making 36 cents every single hour. And the hourly work wage, guys, we went up, so now we're making $1.52 versus $1.51. So we got a raise of 1 penny, so that was pretty good. This is if our portfolio was to go work a 40-hour work week, they would get an hourly rate of $1.52. So I guess our portfolio was doing a great job. But long-term goal is to try to get this to minimum wage. I think that would be very exciting. But yeah, guys, this is actually all I have for you guys in this video. If you stuck all the way to the very end, be sure to drop a big thumbs up on the video. Be sure that you're subscribed with that notification, and drop a hashtag red, because we are going to be buying companies that are in the red next month, and we're going to continue to dollar cost average into these companies. So it'll be very exciting. I'll see you guys in the comment section. Take care, stay safe out there. Bye, guys.